traders from lovely Las Vegas, and welcome to Short-Term Trading Live with Oscar. Hi, I'm Oscar Carboni. I've been trading for the better part of 29 years, my entire adult life. Most of that has been spent in these trading pits down on Wall Street, and I've come out of Wall Street to teach you local traders in Vegas how to get in and out of these markets. Tips, tricks, and techniques that I've learned over my life down here dealing with these guys every day. And traders, there is no better experience on this planet for a trader than the guy who spent his adult life in the trading pits. So what I have to teach you in these weekly shows is fantastic. It'll help you with your trading. It'll help you with your education if you are looking to become a better trader. And these videos should make you a much better technical analyst. Traders, as we know, futures trading is extremely risky and can cause substantial financial loss. You should never ever trade commodity futures if you do not have risk capital to lose, if you do not understand these markets, and if you do not place your stops. Traders, again, Oscar Carboni, 29 years experience, and let me tell you something. Last week's show, I told you that I was going to teach you about rules that I've learned, mentality, rules that we've all picked up down on the floors of the exchanges where you've traded hundreds and hundreds, if not thousands of times over and over, and you figure out what rules, what rule base works for you, and what things you should stay away from. So, many times I stepped out of the pit after a tough day, especially in the beginning of my career, and I would wonder what I did wrong. Oh my goodness, I lost again, but it's the same way I lost yesterday and the same way I lost the day before. What am I doing wrong? And what I would do is I would write a list of rules, what to do, what not to do, what's the proper mentality behind trading. What do I do when I'm in a trade? What do I do when a trade's going against me? What do I do when I want to take a profit on a trade? Lots and lots of things, lots of factors are involved in trading, and a list of rules that will help you get through those trades is one of the best things that you can do. Now, not many of you will have 30 years experience in this business. Not many of you will ever have traded down in the pits on Wall Street. So you might not have an accurate set of rules or a rule base, but I am here, Oscar Carboni, to teach you and share with you the techniques and the rule base that I have created. Last week's show, we went over 5 rules, mentality that will help you once you figure out what the trade is that you would like to interact, what market, whether you're buying or selling, and where your stop belongs. Then you need the proper mentality. What do I do now that I am in the trade? Traders, coming up with the analysis to figure out where a market's going to go, you also need to know what to do with that information. They are equally as important as one another. It's fantastic if you take the techniques I've been teaching you, swing days, flags, you name it, any of the techniques I've taught you in the past 8-12 weeks. If those techniques, if you find one and you realize it looks good and it's going to work for tomorrow most likely, what do you do with that information? That's where the mentality comes in. Now, again, the experience I've gotten from the trading floors, there is no better way to put together a rule base like this. So, last week we did 5 rules. We went over 5 very important rules that traders like I know are just fundamentals that you keep in your trading basket. When you are trading, you keep in your mind and you use for discipline. In this week's show, we are going to go over 5 more rules, traders. Rule number 1 will be risk management is more important than being correct. Risk management is more important than winning. Absolutely, positively. Rule number 2, never, ever curve fit your indicators. Never curve fit your indicators. Rule number 3 that we will discuss in today's show. Never get married to your positions, traders. Never get married to your positions, especially the bad ones. Rule number 4 that we will discuss today. I will always place my stops first. And rule number 5, I will never move my protective stop stops just because the market is getting close. Traders, those are 5 rules that I assure you, once you incorporate them into your trading style, they will help you with the analysis, they will help you get through trades, and they are absolutely going to help you keep discipline and maintain discipline while you are trading these markets. Traders, I have been trading the markets now for almost 30 years. Believe me, these rules are tried and tested. And one of the programs I've used for the past 29 years to gauge where markets are going to go next, and I've been a beta tester for every trading program that's come down the pipeline for the past 20 years. They would send those programs to me, especially in the 80s and 90s. I would go over those programs and show them what I liked and disliked. And there was one program that has stayed with me, that has caught my attention, that has helped me come up with some of the best trading recommendations I've ever come up with, and that is Metastock. Traders, no joke, I use it every day. Take a look at this, it's a message for my sponsors.
Making money in the markets is not an easy thing to do.
That's why I ordered this free book and demonstration disc from Metastock.
Metastock uses technical analysis, good solid information.
Not just hunches or guesses. This helps me make better trading decisions.
I find the best trades and I can decide when to buy and when to sell.
With Metastock, I trade more confidently.
And that's helped me be more successful.
Go to metastock.com/TG8 right now for Metastock's free demonstration disc and a free book on trading strategies.
Okay, last week's episode we went over 5 trading rules. I received letters from you Omniacs out there, and you liked the mentality, and I'm glad. So hey, I'm coming back at you in this video with another 5 rules I have in my rule set. Traders, rule number 1. Risk management is more important than winning. Understand something, traders. If you are doing this, especially for a living, there are going to be many, many winners and many losers, right? You're going to win, you're going to lose, you're going to win, you're going to lose. The idea is to make sure that you've done your analysis correctly and you got your protective stops in so that the losses are not as great as the wins and there aren't as many losses, hopefully, as often as you have winners. So that's what you strive for, of course, and we do everything in our power to try to make that happen, especially by using the analysis. However, risk management is more important than whether you won or lost. And what does that mean? That means always have a trading plan that includes a stop. Traders, risk management means this. I have $10,000 in my account today. I am going to trade today. No matter what happens, I will not have less than $9,400 when this day is over because I have money management techniques. I have risk management techniques. And my most important one is to make sure that I am preserving my capital. Money management is more important than winning. That means always have a trading plan that includes a protective stop loss order before you get into the trade. Remember, rule number 1, risk management is more important than winning. It's not about winning, it's about preserving your capital. Traders, in my lovely book of rules, and believe me, there are so many, we'll never get them all done in these shows. Of course, you can certainly come on down to an OMNI camp where I'd be more than happy to share them with you, but that's another story. We'll get to that. Traders, rule number 2, never ever curve fit your indicators. What does that mean? Let's say you get Metastock, comes out of the box, right? You put it in the machine, you pull up stochastics, you think the stochastics are telling you the market wants to go higher, and the first thing you do is go in and change the parameters in the stochastics from 5.3 to 8.6 or 5.12 or whatever you think will work better. And here is my message to you about that. Never curve fit your indicators, and this is why. Traders, Goldman Sachs, Morgan Stanley, JP Morgan, you name it, all the biggest banks and brokers out there have spent tens of millions of dollars and countless man hours and tested it with thousands and thousands of trades. There are certain indicators that were developed by Wells Wilder. You can have Bollinger Bands. There's all sorts of indicators out there. But there are about 8 or 10 indicators that have made it through and are still being used today that were developed quite some time ago. Right? You got RSI, you got stochastics, you got MACD, you know, the major, largely used, widely used indicators. Here's the fallacy of so many traders. They take the indicator, they change the parameters, and they think they have found the Holy Grail. I knew I was born for this business. I know the proper parameters. Goldman Sachs and their millions. Wrong. Ben Bernanke and his team trying to figure out what's going on. Wrong, because me, the individual trader, I've got the answer. I've changed my parameters. That is not the thing to do, traders. If you are a serious professional trader, you must realize this. The traders and the scientists that have come up with these indicators have come up with the proper parameters. They've spent countless hours, tens and tens of thousands, if not millions of dollars, and those indicators are still being used by guys like me and you today. That tells you this. All the work has been done. All the back testing has been done. There is no need for you to be a genius and curve fit your indicators. What happens when you do that? You've now created an indicator that no one else on the planet is using. You've got your own indicator, and if no one else is using it, the whole self-fulfilling prophecy that technical analysis would not work. What do I mean by that? Technical analysis basically is a self-fulfilling prophecy. If is an analyst like me and an analyst like you and one at JP Morgan and one at Morgan Stanley and one at the Fed and one everywhere where there are people trading, if there are analysts that are using indicators and coming up with the same idea, using this indicator base, looks to me like the market's going higher, then the herd is looking at the same direction and you will probably catch the trade with them. If in fact you've curve fitted your indicator base, what you've done is made it where nobody's looking at what you're looking at, and the odds of it working are not very high. So stop trying to create the Holy Grail and do not curve fit your indicator parameters. Take this tip from Oscar. Okay, let's move along. More rules, and rules are something like we learned in school, like we learned from our parents when we were children, like we must follow today. Without rules, there is chaos. Trading in chaos will not work for you. You must have rules to help maintain discipline. Another one of our rules is never get married to your position. Traders, especially you traders that are not trading commodities and are trading stocks, there is a mentality out there that is absolutely horrible for stock traders, and the mentality is this. I've done analysis on the company, I've decided to buy XYZ stock, and it went straight down. And what am I going to do with the position? I'm going to put it in my portfolio and hold it. You know why? Because I know that it's a good company, and I know that the market will come back at some point and I'll get my money back. What you've done is you've just married the bad position. You've convinced yourself that your analysis was right and the market is wrong and the stock is wrong and the herd is wrong, but you personally are right by holding your losing position and putting it in your portfolio. Doesn't it sound wrong? It is wrong, traders. Never, ever marry your positions. You do not want to put a position on and just marry it and hold it. And you know what, traders? And you know I'm looking you right in the eyes right now when I say this to you. How many of you have done exactly that? You put on a trade, you put the trade in your account, it starts to go against you, and instead of getting out with your stop loss, goes into the long-term hold portfolio. Wrong buzzer, don't do it. Very, very bad rule. Make sure that you never get married to a position. Traders, if you'd like to come out to OMNICAMP, come on down to livewithoscar.com. Click the button where I will be teaching these trading tips to you, plus many, many, many more techniques. Take a look at this commercial.
Traders, Oscar Carboni is holding another OmniCamp live in Las Vegas. OmniCamp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Listen to this testimonial given by an OMNI graduate.
You know, this OMNI camp was a big stretch for me because I wasn't sure if this is what I wanted to do. I don't normally do day trading, so I figured that what I would do is spend an OMNI camp to see if I knew how to do a day trade, could pick a trade. I was absolutely shocked. The techniques that Oscar does show, it was incredible. I thought at the end of this I've learned an awful lot. I can't wait to go back and start using the techniques to see if I can actually make money and good trades on this thing. I would say to anybody that questions or wonders if they should do an OMNI camp, I would say it would be a great asset for your future in trading. So it was a great experience for me. I hope someone else does it too. If you question it, ask anybody that's been in our group, and we had a great time and we learned a lot.
Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Vegas, welcome back. Okay, so we've gone over 3 rules so far. Traders, make sure that you put these rules with the last week's show's 5 rules that we went over. If you did not have a chance to watch last week's show, simply come on down to livewithoscar.com, click TV shows, and go catch up. Traders, every show I've done for you here in Vegas on Vegas television is at the site, so please go to my site, livewithoscar.com, and catch up, especially with these trading rules. Last week, part 2 this week. Let's continue on. Traders, rule number 4. And this one is a very important rule. This rule is one that every single one of you tuning in right now, I know has broken, and here it is. I will never cancel my protective stops just because the market is getting close to hitting them. Traders, how many of you have put a stop in after, let's say, getting long a market? You put your stop in here, the market starts getting close, you cancel, replace it, move it here, the market starts getting close, you cancel, replace it, move it again. How many of you are guilty of that? Oh, I know some of you are answering right now, but believe me, I know, because I've been in this business for a long, long time. That is one of the worst things that a trader can do. Listen to me. You have a trading plan because you have been taught that from me in many of these shows. Create a trading plan from your technical charts the night before you're going to trade, then execute that plan flawlessly. Now, that plan will absolutely include a stop. That stop will be placed first, and it will be part of your trading plan for tomorrow. Now, when the market opens and you get filled and the market starts to come towards your stop loss order, what do? I'll tell you what you will not do. You will not cancel your stop just because the market is getting close. I have witnessed too many traders literally get carried off the exchange on a stretcher, so to speak, because they moved their stops so many times that their account went broke, then the house went out the window and the Mercedes and the savings bonds, because that's what will happen to a trader if they do not maintain discipline and they do not keep their stops in place. So when you have a trade and you have designed the stop for that trade, you leave the stop where it is. If the trade becomes profitable, you start trailing that stop to lock in profits, but you do not, I repeat, you do not move your protective stops just because the market is getting close. Please remember that, traders. It is an extremely important rule. I will repeat, I cannot tell you how many traders I've seen lose their careers, not just their trading accounts, because they failed to keep their stops in. Some of them remove the stop completely and just take it out of the system and fly blind because they're afraid of taking the loss. That is not the way this game gets played. Devise your trade. The next day, trade the plan, Keep your stops in. The only time you move a stop is to move it to lock in or preserve equity, not to expand upon a losing trade. Very important rule. I hope you learn that rule and you live it. Traders, I have so many rules in this that would apply to many of the things that we do. So over the next few months, I hope to be able to cover many of these rules with you. But there is one more rule that I found quite important and I would like to share with you in this show at least, and that is this. Many of you may not realize this, but losses are an integral part of trading. There is no way that you are going to be a trader who has wins without losses. Losses are an integral part of trading. You need to take losses as readily as you would take a profit. When you do your analysis correctly and you put your stop in first, if the market does not go in your favor, you accept the loss and you move on. You do not go home and beat yourself up and try to explain that the rules that I came up with don't work today because I was stopped out. I'm never selling another swing day again because it didn't work today. That's not how professionals trade or play this game. Professionals recognize that losses are going to be a big part of what you do. How do you handle the loss? How do you mentally prepare for it? How do you deal with it when it's coming? How do you keep to your trading plan? These are all parts of the mentality that you need to know. There is an entire world of information that you need to know about when it comes to the mentality behind trading. Again, I love teaching technical analysis. I know the markets move off the charts. You'll never see a market move that you cannot find on a chart somewhere, but that does you no good unless you have the proper mentality behind the trade. So that's what last week's show and this week's show is about. It's about teaching you the mentality that I've learned down on the trading floor. Traders, believe me, when you've traded tens and tens and tens of thousands of times over and over every day for a living, you go in and you trade and you trade and you trade and you trade. There's lots and lots of mistakes that get made. Pros like me, we list those mistakes, we recognize when we're going to make them again, and we start to live by our trading rules. There is no way to get this right unless you decide to have trading rules and to stick to them. It is extremely important to stick to your rules. Traders, we know this, and we talked about it in the last show, actually the one before, and that is fundamentals always come out in the charts first. You must recognize the charts are always right. The markets are always right. We as analysts and traders, we must get the interpretations correctly. But if the market does not go in your favor, the market was right and your analysis was wrong. If you are trading purely on opinion and not technical analysis, then go lock yourself in a closet right now and never come out again, because traders like you are dangerous. You must have a technically devised plan, and you must enact or react to that plan when the market starts to come your way. Traders, believe me, the advice that I'm giving you is advice that you should absolutely adhere to. These trading rules are gems. You are talking to a guy who spent 29, almost 30 years working his fingers to the bones in this industry, trading every day, analyzing every day, coming up with rules, then taking those rules, making them even better, using all sorts of indicators and figuring out which one of those indicators grouped together point you in the proper direction. All of that is wrapped around trading mentality. So you will learn a lot more about trading mentality and about technical analysis over the next few weeks. I really hope that these videos, these TV shows are helping to keep you local Vegas traders in tune with market movement, in tune with the analysis behind it, and in tune with the proper mentality behind the trading. Traders, if you'd like to meet me in person and learn a lot more about what I'm teaching you in these shows, come on down to my free seminar. I am talking FREE. It is a seminar that's going to be held here live in Vegas. It's at the Marriott August 20th. I will be there live for many hours. We are giving away programs from Metastock. We are giving away a year's subscription to Stocks and Commodities magazine. We are giving away discounts on OmniCamp, and we are giving away tips, tricks, and techniques live before your eyes to help you traders survive in this industry. Traders, listen, if you come on down to my site, livewithoscar.com, and you watch the action that takes place, you watch how I handle myself, how I teach my students, you will recognize this is a very professional outfit, and we are quite unique, traders. The uniqueness about us at the Omni Trading Academy is we can call tomorrow's numbers today with a very high degree of accuracy, and I can teach you how to do that for yourselves. What you're learning in these shows each week will certainly help you get there. Coming down to my site, Live with Oscar, jumping into my free chat rooms, and grabbing a free membership and spending your days with me is certainly going to help you. And if you'd like to spend 4 days with me locked in a classroom where I will beat this analysis into your head so that you can mimic the same trades I'm coming up with, you come on down to an Omni Camp that I hold 4-day training sessions live right here in Vegas. To do that, simply come on down to livewithoscar.com and click the Omni Bootcamp banner. Traders, thank you so much for watching my show. I hope the last 2 shows taught you a lot about the trading mentality behind the trade. Make sure you keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop sorry. Emotions are out. Yeah. Thank you for tuning in, Vegas.
Making money in the markets is not an easy thing to do.
That's why I chose Metastock, the award-winning analysis and data package.
Metastock uses technical analysis, good solid information.
Not just hunches or guesses. This helps me make better trading decisions.
I find the best trades and I can decide when to buy and when to sell.
With Metastock, I trade more confidently.
And that's helped me be more successful.
Go to metastock.com/TG7 right now to get your free 30-day trial of Metastock software.
I love Metastock.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.